the confirmation. Again, I'm Jonathan with IVolLive. Today on our Tuesday live session, our goal is to spend a lot of time looking at the charts feature within IVolLive, showing the different things that you can do, the different data points you can look at, the different technical analysis tools available to you, the different drawing tools. It's a really, really cool chart feature. So we want to make sure that everybody understands exactly what they have available to them within IVolLive. So what I've done here is I've logged in kind of just right before, you know, hitting go here on the webinar. And so we could simulate the experience of logging into iVolatility for the first time. So I know we have some experienced users and some new users, so I like to kind of keep it holistic, broad overview to make sure that we don't leave anybody behind. So when you log in, you will first see our friendly green and white concierge here. He's going to welcome you to the platform. He's going to show you where all the key tools are. So you kind of have like what I call the totem pole over here, this vertical tool access. And then you have over here a bit more horizontal of a toolbox. You know, the most popular tools are IVolLive, stock sentiment analyzer, which we just did last week, P&L calculator, real-time spread scanner, data download, right? If you need to get historical data, daily updates. And then we just added this calculator tab here by popular demand. So now the options calculator and the probability calculator live within this link as well. And you can still bring them up the traditional ways within the options chain, which I'll kind of briefly show today. So again, these are the popular tools. You can kind of expand, contract this view anytime you see those chevrons, just depending on what you prefer. And then for anything, any questions regarding today's session or any past session, we're at support@ivolatility.com. A couple other ways to get a hold of us. Oh, we got a couple more here in the waiting room. Just one second. Everybody in, perfect. Great. So a couple more, again, any issues or comments, questions, if you need help setting up your subscription, we're at support@ivolatility.com. A couple other ways to get a hold of us and get some good information. We recently updated our iVolatility YouTube page, so you can follow us at iVolatility's YouTube. Find us here. We have some really cool videos. We just filmed a new welcome video. Also, we've got our videos reorganized and reclassified. We got some nice little designs now, you know, behind each one. And we also have our playlist sorted. So I would encourage everybody to follow us. The cool thing here is I tend to post 1 or 2 bonus videos a week. Those are short little videos where I take a certain topic and do a quick little almost like a short. So you can see here, this IVolLive short, this is how to view changing option prices. So, you know, it's only 7 minutes long, but in that video, I focus on one topic, and that's how to view, you know, changing option prices throughout the day. And you can see here, these are our recorded sessions from past Tuesdays or Thursdays, depending on when we hold these any given week. And you could find, you know, those are typically longer, but they do a deep dive into a specific tool, like what we'll be doing today. So definitely check that out at iVolatility's YouTube. Another cool way to stay in touch with what we're doing is our Twitter at iVolatility. We post, you know, interesting trends with implied volatility, especially, and the names that we see spikes or declines in here throughout the day. And then Reddit. So we've also been actively posting on our Reddit page. So I'll put all of this, I'll have the team put all of this in our follow-up email where we'll send this recording to everyone. But, you know, here you could follow some of our thoughts on the market and what's going on with implied volatilities and options prices. So those are a couple cool ways to stay in touch with us. Also, the free live IVolLive webinars. Clearly, you guys found that link one way or another. Otherwise, you wouldn't be on today's session. But that's also available here within your dashboard. So moving right along, again, here is your toolbox. We'll spend most of our time within IVolLive today. I have a few examples I've prepared to show you for some actionable stocks that have some interesting trade setups to me. Here, I have some examples in mind, but if I didn't have examples, what I would do I would come here, I would kind of read through the latest news, see if there's anything that caught my eye. Other thing I would encourage everybody to do is always go to this news and research section. This is where we have our editorial that we put out at IVolLive. So if it makes it here, that means we're particularly interested in what's going on. And this one was from, let's see, September 15th, and we were analyzing oil, right? And specifically, we said, well, what's going on with oil? Why is the price going so high? And what companies are benefiting from that, right? So that it might be a pain for the consumer, but in the capital markets, one individual's pain is another group's gain. And so we found Exxon, and we started analyzing Exxon here, and then we tell you some interesting, potential ways to play it. So that was one really cool article. We'll kind of touch on that today with Exxon. And last week we put out, news. We kind of covered what the Fed did with their pausing and interest rates. And then we also said, companies that have been affected by interest rates have been big tech. What's big tech been doing? And then we analyzed Cisco buying Splunk, the largest acquisition it's ever done, and what happened with price and implied volatility. So we'll look at this today because this is one of my favorite kind of chart patterns within IVolLive, where you see spot price in blue here, KISS, implied volatility in green here. It's one of my favorite trade setups. So we'll talk about that today. And again, we don't like to just give you the information. We like to give you ideas on, what to do with it. Because it's like, okay, this is great, but now what do I do? And this is kind of the overall point of IVolLive, right? It's to arm you with the tools and the data to then use to put on actionable options trades, right, with your broker. So without further ado, let's go down this kind of totem pole here to IVolLive. I want to just briefly show, I'll have the team include the recording in the today's recap video that we send out via email. But basically last week, what I did is I spent a ton of time in our webinar going through the updates within IVolLive. So as that loads, let me let a couple more people in here. So specifically what I did is, here's our examples. We'll be going through Walgreens, Exxon, and Cisco today. But one of the cool things I did last week, and again, we'll include that recording, was I showed the different ways to run scans with our stock monitor. So now we have the ability to, change the title here. So we can say stock monitor, analyze today, for an example. And now I created all these different custom groups. I created different custom scans. So, and I showed how to scan for fundamentals, how to scan only for volatility, how to scan for price change. So again, it was a really, really cool session. And I'll make sure we include that in the recap if you weren't able to join us last week. But for today, let's focus on our the charting tool available within this IVolLive stock monitor feature. So last week we covered how to find and scan, and then this week we'll drill deeper on some of those names that we found, which again were Exxon, Walgreens, and Cisco, which we also recapped in our editorial that I just showed you from the dashboard. So from this screen, there's a couple things that I do if you're kind of looking at it left to right. I always have a stock monitor tab here. And for any newbies, the way to pull those up is you come here, stock monitor. That's going to set the defaults, right? Which is a scan here against the DJX, the Dow. And I'll minimize this. So looking from left to right, I always have my stock monitor. I always have my charts tab here. Now, this is a question that kind of came up beforehand, which is, where can I find charts? So we're going to spend most of our time looking at individual charts today, which is within like Exxon or within the VIX or within SPY. But we also have this tool available, which is on our YouTube page. You can go back and you can look at all of our past videos on charts. We've done some really, really deep dives here. And in these charts, what you find is you can go really granular on spot price, implied volatility, single contracts, implied volatility index, total open interest and volume, historical volatility, term structure, skew, premium, and IV difference. So again, those are all available to you to really take a granular dive, depending on which chart type you like best. Those videos have been recently edited and posted to our YouTube channel. Then moving left to right, we have our SPY. So one of the first things I do every morning is I look at SPY, I look at the chart. And here's my key takeaways. I like to go to the 1 year, just to try to get like a temperature gauge. But by virtue of your subscription to IVolLive, you have up to 5 years worth of data on spot price, which is in blue, on implied volatility, which is in green, and then on historical volatility, which is in orange. So you can see there's a huge peak here in implied vol, or in historical vol. Let me move my zoom bar out of the way. During COVID, right? This is when COVID happened, where the market crashed. You could see in blue, and then implied vol and historical vol spiked, right, at the same time. So you see this kind of inverse relationship between price and volatility. But just know that you have up to 5 years worth of data for any underlying that we cover, for the spot price, the implied volatility, and the historical volatility. So if we zoom in, 5 years is a bit long of a time frame. If we go to this 1 year, here's what stands out to me. We have a few more here, hopping in. 1 second. So the 1 year, here's what stands out to me. Here's a good example of what you can do from this charting view within the IVolLive stock monitor. You can draw trend lines, right? So here was our uptrend over the past year. We come here, right? Other things you can do to these lines is you can kind of bulk them up, send them to the gym. You can also put arrows in. So we had our uptrend on the spot price, and you could see, in let's see, in August, right, we had kind of a volatile, low volume summer. So the spot price for the S&P came down. It broke through support here, and it kind of bounced up, and now it's broken down a little bit more. So the question is always, right, the $1 million question is, where's it's going to go next? So for clues on that, I like to look at implied volatility, right, which is down here in green. And we can see that implied volatility, interestingly enough, implied volatility has been range bound, right, for the past. So here we go. That is resistance. And then come here. Let's do one more line. This is support. So, the implied volatility for the S&P has been range bound really since the summer. And the reason why you typically see this is because there's a lot less volume during the summer trading months, right? And so, the traders at the Hamptons, the big fish are on their vacations. And so, those that are left behind, the junior traders, they don't want to mess up, right? So you typically will see kind of in July and August this range bound IVX. But what will happen typically in the fall months is you'll see a breakout, right? Now, if the market surges higher, what you'll do is you'll see this implied volatility break below support. If the market goes lower, right? So we've had a downturn recently, then you'll see this implied volatility break above this resistance line here, right? Which will mean markets going down and options prices are getting more dear, more expensive. So these are a couple different things. The other thing you could do from this view that I really like doing every morning is I actually like isolating only the implied volatility of the S&P, right? So let's do that. So this is the implied vol, right? So this is IVX for the S&P 500. What I like doing is I like applying some simple technical indicators. So this is a great example. These are all the technical indicators available to you within this charting view, right? So it's from A to Z, alphabetical order. Virtually any technical indicator you could want, to apply, you can do so, right? And if you know exactly what you want, you could type it in and it will pop up. If there's anything missing in here, just shoot us a note, support@ivolatility.com, and chances are we can add it. But here, just two simple ones, right? If we add the Bollinger Band to the implied volatility here for S&P 500, what we see is that recently on our 1-year chart, remember we're looking at 1 year, the implied volatility for the S&P has gone above its upper Bollinger Band. So I love to see this, because when I see this typically means that implied volatility will retrace. And when implied volatility retraces, the market goes up. That's typically what it works. So I love to put on bullish bets when I see this happening right here. So now is a perfect time within the market, right? Because I'm looking, the IVX never stays above its upper Bollinger Band. It always kind of retraces. And so now is an excellent time, in my opinion, to be looking at bullish bets. On the RSI, you can see we didn't quite get the extreme that we got on the Bollinger Band, but still, anytime we're 65, anywhere from 65 to 80 on this chart, that shows you that implied volatility is stretched to the upside, which means it's vulnerable for a pullback. When it pulls back, market goes up. That's the inverse relationship. So this is another one of my favorite things to look at every morning. When I looked at this on Monday, I started kind of sharpening my knives, right? My trading knives, because I saw this developing. And then I knew, okay, great. Now it could be a time to strike. What are some names I'm interested in? So before I get to individual names, the second chart I always pull up is I pull up the VIX. So this is another great teachable moment. On the left, anytime you pull up these individual tabs, on the left, you will see the fundamentals, right? So you'll see bid, ask, you'll see implied IVX 30, you'll see historical volatility. And then on the right, you get the chart. And then beneath us, we have the options chain. And those calculators that I mentioned earlier that kind of earn their way to their own link here and icon, they are still available here within the options chain. You just click on them and they pop up. And you can see we recently updated those calculators as well. So we will cover those in a future session. But for now, let's pull up our VIX chart. So we focused on 1 year for the S&P. The VIX is pretty sensitive. So I like to focus on the 3-month chart for the VIX. There's nothing wrong with the 1 year chart, excuse me, but the 3-month is the one I prefer. And again, as with all these instruments, you can go out to 5 years and look at that. You can see this kind of beautiful relationship between price in blue. So this is the VIX's, underlying price. And then what's neat about this chart is you're seeing the implied volatility green. You're seeing the fear gauge of the fear gauge, right? Like a lot of market pundits and participants call, the VIX the market's fear gauge because it measures, the volatility within, the S&P over the next 30 days, right? Well, with IVolLive, you're able to get a fear gauge of the fear gauge, which is priceless information. And the way you do that is here you can see we have kind of, it looks like a lot going on, right? It looks like kind of a kindergartner went crazy on their art project, but really what you're looking at is the price, right? The spot price of the VIX, which you could see has kind of bounced recently. And then you're also looking at the underlying volatility. So if we isolate the volatility of the VIX, just like we did with the volatility of the S&P, we can apply the same tools right here, and we could do relative strength index, and you can see on a 3-month scale we're kind of coming up towards that upper Bollinger Band, right, for implied volatility. And what this means for the VIX is the higher implied volatility for the VIX, once the VIX breaks above these upper Bollinger Bands, what that means is the VIX will retrace. Well, when the VIX retraces, the market goes up, right? So this is almost like a double affirmation. And in fact, let's go out to the 1 year. So we come here to the 1 year. We can see that the VIX is approaching its upper Bollinger Band, right, on its IVX. What we saw too with the S&P, its implied volatility was above its upper Bollinger Band. So what these two things tell me within 10 minutes is that implied volatility for both the VIX and the S&P is high, and it's abnormally high. And it's probably a good time to start looking at bullish bets. Now, if we were down here, it would be the opposite, right? If the IVX for the VIX was down here, and if the IVX for S&P was down here, then I would say, whoa, that's way too cheap. It's below its lower Bollinger Band. That's going to retrace. And when that retraces, the market's going to go lower. And that's when I start looking for bearish bets, as an example. But for now, when I see this, I'm very confident. I say, okay, well, let me look for interesting bullish bets, right? And so one of those bullish bets that we looked at a couple of weeks ago was Exxon, right? So this is, one of the largest oil companies on planet Earth. They're printing money now that oil has seen this resurgence in price. I mean, they print money anyways, but especially when oil prices are on the rise. So a couple of things that I started looking at over here on the fundamentals, I was looking at implied volatility versus historical volatility, right? I was saying, okay, well, IVX looks 30 days in the future. Historical volatility looks at essentially the past month of trading action. What was the actual volatility reading? And then IVX is looking at what the upcoming volatility reading is likely to be. So we could see we have a slightly more volatile month ahead than what we had in the past. That makes sense, right? With a spike in oil prices. Also, we have earnings that will come up for the final quarter of the year. So what I do then is specific to charts. I'll come here. And a lot of the trades I like to put on last anywhere from 3 months or below, right? And so one of the things I was looking at, one of my favorite signals that I saw a couple weeks ago that I want to highlight here is, let me get rid of historical volatility. I love it when spot price and implied volatility kiss. Like, that's what I call this, the kiss. And so you can signify that on your chart tools here just by channeling your inner artiste, right? There we go. And this is where those kiss, and this is what grabbed my attention, when this happened, because what happened was we had price kind of chopping sideways, and then all of a sudden had this intersection with price and implied vol, and then price started going higher and implied volatility started going lower. When this kiss happens, I like to sell puts if I'm bullish. So I was bullish on Exxon, but I was waiting for this kind of bullish thesis to be confirmed by this kiss. And then when I'm selling a put, I want to maximize my income. So I don't want to sell the put way down here because, at this point, implied volatility has gone lower and my premium I'd receive has gone lower as well. So at this kiss moment is like the Goldilocks, right? It's not too hot, not too cold. And then I can sell that put, still make great income, but I don't stand that same risk of selling down here, right? When price is way down here, and implied volatility is way up there, right? And so let me highlight that relationship too, because I think that's a good example, right? Here's another way you can use your charting tools here. And then again, let me leave our line. There it is. Right. And so you can see this discrepancy. Again, this is a great teachable moment, the inverse relationship between spot price and implied volatility. But I stay away. Like, this doesn't make any sense to me. Implied volatility is incredibly high and the price is low. We have terrible price action. So I stay away. But when I see a kiss like this, I'm like, okay, this is a great, historically, I've done hundreds of trades like this where this intersection happened, and it's a great opportunity to sell a put on companies I like. That's the key thing. If I didn't like Exxon, when I saw this kiss, I would do nothing, right? But when I'm bullish on a stock like Exxon, WA, Walgreens, Boots Alliance, and Cisco, the three examples I have for you today, I'm looking for a kiss like this. So in Exxon, this is what we saw. From here, what I would then do is two things. I would take a picture, right? So I would take a picture from my trading journal because this is a setup that I'm interested in. All other things you can do from this view is you can add your indicators like I just showed, right? I could add as many technical indicators as I want. And then I could also save this charting view. And then I could also load a chart layout, right? And I want to do a more recent example for that for Cisco, because this was a couple weeks ago. I just wanted to point out what originally got my attention, which then led to that article we put out in our weekly newsletter. Moving right along to Walgreens Boot Alliance, this is another example I wanted to show. Over here, we have a very similar setup. You have IVX at 43, you have historical volatility at 34. It's a bit more stretched than what we saw with Exxon, but it's the same general idea. So what that means is that when I come here and I come here and I pull up our 3-month chart, I know I'm going to see a moment where there's a kiss, right? And there it is. Again, once you do enough of these, you kind of get the hang of it. And when you look at the stats and the fundamentals, you know what you're going to see on the technicals and on the chart. Same thing when you look at the chart and the technicals, you know what you're going to see on the fundamentals. So here we go. This is the kissing moment. But what was interesting about this was here, I had a stock that where when the kiss happened, the stock was going down, right? And you can see we have this steady downtrend. At the same time, implied volatility was going up. This is the exact opposite of what we saw with ExxonMobil. So in this particular case, I would stay away from the trade. So sometimes it's not about the trades we make, it's about the trades we don't make, right? And what was interesting about Exxon is we had the exact opposite setup, right? Which was very bullish. And considering what we saw with SPY and VIX, I want to be bullish. On Walgreens Boots Alliance, oops, sorry, I clicked away from that. 1 second. Go back to it. Here, what we have is the exact opposite of what we saw with Exxon. And so I wanted to point this out because you'd say, wow, maybe this thing is oversold. Come here. You say maybe Walgreens is oversold. Maybe now's a good time to pounce. Well, I would caution against it. And the reason is because not only did this kiss go the opposite way, but with implied volatility skyrocketing higher, like look at that. We come here. Look at this uptrend in implied volatility. This means Mr. Market is not happy and is not thrilled with Walgreens prospects by any means. Look at that. That's just a steady uptrend. And then the price action has been abysmal. So even if you wanted to go long, and bet on a bounce, now would not be a good time because A, the downtrend continues here with Walgreens. But B, even if you wanted to be bearish, it's not really a great time because the price has kind of, just crashed lower. But at the same time, you would have to pay a fortune for the puts, right? Because implied volatility is so high. So again, and then the other thing we could do here, as we know, is we could apply technical analysis. So we could come here. Let me get rid of my beautiful drawings. And let's do our Bollinger. And then let's do our relative strength. And the good news is, what's great about these tools is that they apply to the implied volatility. So what that means is most of the time when you're looking at charting tools and other platforms, they're applying these technical indicators to the underlying stock price. In our case, we're applying them to the implied volatility, right? The underlying implied volatility. And what's so great about that is it gives you a compass on what's going to happen next with the stock, right? By looking at the volatility, you can predict what's going to happen with the stock. And in this case, we have this massive, it's almost like an alligator mouth here, opening up with implied volatility, approaching its upper Bollinger Band, and then implied volatility way over its upper RSI. So point being, with Walgreens, for all of these reasons, I would just stay away. Like I wouldn't make a single trade, long or short, on Walgreens. This is, almost think alligator mouth, like danger in the water, right? Don't get in, don't swim. However, we can move on to Cisco. So Cisco was interesting because even before the Splunk acquisition was announced, and this is a good kind of moment too, before the Splunk acquisition was announced, what happened was I saw this huge spike in implied volatility for Cisco. And the way I found that spike is I was here in our monitor, and then I did this IVX change from yesterday, right? So this is looking at what names within the Dow have had a big spike day over day. And I saw Cisco pop up. It had like a 25% spike in its implied volatility. After that, I later found out and read the news Cisco was buying Splunk. So, the market makers, the market picked up on something was going to happen. Implied volatility for Cisco spiked, and then boom, market news hits. And so again, I knew something was about to happen with Cisco just based on that scan. And then when I saw the market news, I came here and I started analyzing closer, because normally what happens when a large company like Cisco announces take another large takeover of a competitor, typically what the market will do, it will sell the company doing the buying, in this case Cisco, and then it will in many cases buy the company being bought, which is Splunk. Cisco I've traded a million times, and so I wanted to dive deeper on Cisco, and sure enough, if you come here, you will find that is exactly what happened. So when Cisco announced the news that it was going to buy Splunk for $28 billion, Mr. Market said, okay, great, but that's 28 billion bucks. That's going to be leaving the bank account, leaving the treasury, or you're going to have to borrow it, one or the other, at higher interest rates. And so you saw this downtrend here in Cisco, right? So here's our directional arrow, and then what you saw is this uptrend in implied volatility. which is what the IVX with that monitor told me when I ran that scan. That was before I even knew or had an inkling that there was anything going on with Splunk, right? So here we go. There's a couple directional arrows telling us what's going on. But what was also interesting is that here with Cisco, I saw the opportunity I think now could be a very interesting time to put on a trade, right? Because there's always this sell-off where you have the underlying spot price decline, you have implied volatility increase, but then as Wall Street has time to digest the news, then typically the stock will stabilize and then resume, either chop sideways or go higher. Again, in this case, it's a perfect time, in my experience, to sell puts because what I look for here in these cases, right? When you have this head, it's called a head and shoulders. Here's our shoulders, here's our head, here's our shoulders. What I look for is I look for where there was a kiss, which is here. You can see the spot price intersected with the implied volatility right here, which was mid-August. Let's go ahead and get rid of historical volatility. And then my sweet spot for this trade setup is right here, right when we kind of retrace to wherever that kiss happened. Which again, this is almost like a picture perfect. We're not quite there, but I mean, it's close enough, right? Trading is part art, part science. It's never going to be exact, but we're almost right where I've been waiting for Cisco, right? To come to. And the great news about this too is that with this uptick in implied volatility, it means put premiums will be worthwhile enough to sell, right? Because when we were way down here, that meant that option prices were incredibly low, as we tick higher with implied vol, but at the same time, as we have the price stabilize, that means there's less risk of the price moving lower, but at the same time, we make more income, selling these options. And so this is a picture perfect kind of trade setup that I love. So what I would do here is I would, click here, and I would save this from my trading journal, add it to my log. And then the other thing we could do here, just to show, what the next step is. Our next step is we would minimize. There you can see my beautiful drawing stays up. And now I would start looking at actual trades. So it's okay. We're in my sweet spot, Goldilocks. I reviewed the fundamentals, I reviewed the technicals. Now, what specific trade do I want to make, right? Because all of this analysis really boils down to how can we make money? So, again, we're looking at a 3-month chart. Most of the trades I like to put on expire at 90 days or less. So just for the sake of fun, let's go out to right before Thanksgiving, right? November 17th, 2023. So we could see our spot price right now is 52.76, which means our at the money option is right at 52.50, right? Reading this options chain view, you have the ability to toggle between all expirations, the next couple, leaps. So for an example, if you tend to trade 90 days or less, maybe you just want to see the next 4. If you only trade weeklies, you can just look at weeklies, quarterlies. If you only trade long-term, you could do leaps, whatever suits your trading style. You can also look at all strikes. I tend to trade kind of near or at the money, or just out of the money, but you could look at all, if you wanted to. And then if you only trade calls or if you only trade puts, you could look at that too. I like to have, even though this is a put trade we're looking at, I like to analyze both of them, right? Because I like to say, well, at the same strike, 52.50, what's the put? $1.67. What's the call? $1.97. So it's more expensive to go bullish, right, than it is to go bearish at this point, which makes sense based on that technical analysis and charting that we just did. So I come here, and now it's all about risk reward, right? Because if I sell a put at 52.50, I'm more likely to get put. If I sell a put at 50, I'm less likely to get put, but I make around half the income in this case from selling the put option. So how do you gauge this risk reward? Well, you use our handy probability calculator. So here, this is options calculator. Again, I don't want to spend a lot of time. It's kind of outside the scope of today's session. But we just did a webinar on this that you can find on our YouTube, where we did a deep dive on each calculator. But what I can do here, what we have time for, is to dive into the probability calculator. So if I sell this put at 52.50, right? Because I'm bullish on Cisco. I want to know what's the likelihood I'll be put. If I'm bullish on Cisco, I also want to know, should I be buying a call option, for an example, right? So we go here, 55. So I'll put in a higher price than P1. I'll hit confirm. So the likelihood that Cisco will be a below 52.50 at expiration, which is November 17th, is only 46%, right? So I only have a 46% chance I'll get put at 52.50, and I'll make, this $167 a contract if I sell that option. On the other hand, there's only a 33% chance, excuse me, that Cisco will be above 55. So if I come here to 55, I could see this call option will cost me about $89. Well, there's a 77% chance I'll lose all that whole 89 bucks per contract if I bought that call option. And that's what I mean. When you see this discrepancy between calls and puts, yet you're bullish, a lot of times it makes sense to sell the put, reap the income. Very unlikely you'll get put versus overspending for a call option, right? So that's a good kind of teachable moment. The other thing I could do is I can analyze this 50. I could say, well, there's still a 46% chance that I might get put. And I just want a more remote chance of being put. I could change that P1 to 50. You can see there's only a 25% chance I'll get put. But the market makers aren't stupid. They know that, which is why there's, such a big difference, right? You get paid half agreeing to buy Cisco at 50 than what you do agreeing to buy Cisco at 52.50, right? So as a trader, I just have to, decide what kind of risk reward I want. Typically, if it's a company that I'm interested in buying anyway, and I'm bullish on, like I am with Cisco, I don't mind 50-50 odds of being put. So this is kind of right in my sweet spot, this 52.50. So now that I know my probabilities, and again, you can take a deep dive into these calculators as much as you want. Find a stock you like a Cisco or an Exxon or a Walgreens, whichever one you want, and just plug it in here and play around with different probabilities. It's a lot of fun. You can also play around with things like time, days to expiration. You could say, well, what if Cisco raises its dividend? There's a lot of cool things you could do with these calculators that are outside of what we'll cover today. But for today's purposes, we know, okay, based on our chart, based on our technical analysis, Cisco is exactly where we want it to be. If we want a trade that expires within the next 30 to 90 days, this November trade looks pretty sweet. So let's analyze what our P&L could be. We know our probabilities, but now we need to know what our potential profit and what our potential loss is. So we move right along to the P&L calculator. And how this works is we type in Cisco. Then you just scroll to your specific expiration. In our case, we're right in front of Thanksgiving, right? So that's going to populate behind me here. And so here we go. In table format, this tells me with Cisco at 52.78, if the stock price goes to the following levels, right? What does my P&L look like? So obviously, if Cisco drops to 30 bucks, I'm sitting on a pretty big loss. By selling this put, right, you do expose yourself to the downside. Here, if Cisco goes down in price, this is going to get more and more expensive, right? And since we're selling it, if it goes up in price, we'll be showing a loss. On the other hand, if Cisco stays where it is or moves higher, we'll obviously be showing a profit. This blue line is the break-even line. So when we do our webinar series on the P&L calc, we show all these different ways to kind of use and manipulate this tool. But for now, I come down to my specific action that I'd be taking with my broker. So I'd be going on to my online broker and I'd be selling to open the November 17th, 2023, 52.50 put. I could sell one, or let's say I wanted to sell 10, right? So I want to sell a larger quantity. So instead of $168, I'd make $1,680. Let's say my broker gets me a better price. So instead of $1.68, I get $1.75 per share. Each option contract covers 100 shares. So that'd be 175 per contract times 10. So that'd be 1,750 in income. I could see my implied volatility at 23. Here's my delta, my gamma, my theta. So since I'm selling this option, this is how much I'll be earning in time decay each day leading up to expiration. And then my vega, right? The sensitivity to changes in underlying volatility, which, speaking of which, no trade exists in a vacuum. So if I put on this trade today, certain things are going to happen. Some analysts are going to say the Cisco Splunk deal is amazing. best thing Cisco could do to get ready for the next wave. Others are going to say this is terrible. Why are they spending $28 billion? They should just build it in-house. Point is volatility is going to, spike periodically throughout the holding period. And so you're able to change that. So now instead of 28 on my implied volatility, no, excuse me, 23, it's now 38, right? Because I just said, wow, what happens if there's a 15% absolute jump in Cisco? More likely is a relative jump in a name like Cisco. Maybe if you're trading names in the Russell, you could see more absolute jumps, right, where those things go crazy. But with the S&P 500 or the Dow, these larger, slower moving indices and stocks, typically you see a relative move. And so you could see this just went up 15% relative, right, 23 to 26. And then everything updates for you in real time. What you're also able to do with the P&L calculators, you could say, well, what happens if we get closer to expiration? We're 1 month out, all of this will update based on that lower days to expiration, what we call DTE. So, here, bottom line is, from looking at the chart, running the technical analysis, running the probabilities, and then looking at the profit, the P&L, overall, this is something I feel good about, because I'd say, look, I can make $1,750 if I trade 10 contracts. I'm comfortable with the risk. Even if volatility spikes, I'm still comfortable where I'm at. I'm happy to buy Cisco if it drops to 52.50, and I'm going to get paid well for doing that because I'm in this Goldilocks scenario. The other cool thing you could do just for bonus points, since we recently covered this, you could go to our sentiment analyzer. As a trader, the way to kind of imagine my journey is I always start in the dashboard. I go to IVolLive. I run a bunch of scans. I look at those charts. I find trades I'm interested in. I run them through the calculators, and then I take my favorite name and I run it through the stock sentiment analysis, right? So in this case, Exxon, that kind of ship has sailed. Walgreens, I want to stay far, far away from. But Cisco is very interesting to me. And when I'm selling puts, what I like to see is more holds than buys or sells. And if you're ever pressed for time, all you need to do is come here, type in the ticker symbol, and just look at these little icons. And I can instantly tell, now is a great time for me to be selling a put on Cisco, because when there's a lot of red arrows, that means there's a heavy downtrend. When there's a lot of green arrows, that's a heavy uptrend, which means implied volatility will be low and premiums will also be low. But when there's question marks, that means that the implied volatilities will be elevated, but price action will either be slightly bullish or slightly bearish. And in this case, it's slightly bullish, which is my sweet spot, again, for selling puts. So that's the other thing I do. I come here, I just quickly will look at this if I'm pressed for time. If I have enough time, I'll kind of read through the whole thing. I encourage you guys to do that because you get, the fundamentals here, and then you get the technicals here. And our system analyzes all of that for you and then gives you kind of an analysis based on the underlying sentiment of the stock. But in general, I would say, okay, great. This affirms, confirms my trading thesis. And then I would just move right along. And I come down to the P&L calc and do exactly what I just did. And then I would enter that trade. So, and then let me come here. I do want to show this one more time. I want to show how to save those chart layouts that we were just looking at. So that way you guys know how to do that, and you can pull those up at your convenience here. As that loads, if there are any, let's see here. There are any questions, let's see. How do attendees get the recording? So what we'll do is we will edit this and we will then send it out to everybody that registered for today's webinar. And then I'll include those bonuses that I mentioned at the beginning, like the webinar on calculators and the webinar on the other charts, right, within this tab. And then Michael, let's see. Okay, great. Looks like we have a support question. Michael, I will get to that. Thank you for letting me know so I can address it. Just real quick, I want to show this. So if we go to the 1-year chart, we go to the VIX, let's say, this is a good example because, creating essentially you could create a fear gauge for any instrument that you'd like, right? So we could do a fear gauge to the fear gauge, but we could also do a fear gauge for TLT, a fear gauge for XLM, Walgreens, Cisco. So if we came here to the 1 year and then we expanded this view, right? And then let's say we got rid of historical volatility and spot price, and we added those indicators we've been playing with today. So Bollinger Bands, RSI. What we can do now is we could hit, let's see, save. So this could be, 9, 26, 23, implied and implied vol, underlying implied vol with BB and RSI, right? So now I can hit save. And what I can do now is I could pull up, any chart, right? So I could come here to TLT, right? This is another one of my favorites because it analyzes interest rates. And recently, not at all times in the market, but recently in the market, since the Fed has started raising rates and tightening, this has been an interesting market mover, right? Is the direction of interest rates. So I could come here, right? And then I could say, let's load chart layout, and we are interested in this chart layout. And then I could come here to our 1 year chart, and there we go. So those technical indicators that I like are instantly applied in the same way that they were applied on the VIX. And so I could see TLT is approaching, its implied volatility is approaching its upper Bollinger Band. So I would kind of put a watch list on this. I would say, okay, let me see if this thing spikes above the upper Bollinger Band, or if it retraces, right? If it spikes above, then I'll know implied volatility will retrace and TLT will go higher. If it retraces here and just kind of meanders sideways, then there's no clear direction. But that's how you would save and then apply a chart layout. And then again, what you could do here is you could add, the chalk and money flow. You could add, let's see, other popular ones. Again, just scroll through alphabetical order. The EMA across, we could have put historical volatility back in. Ichimoku Cloud is another one that I like. MACD, another popular one, and so the point would be, let's do, where's our stochastics? Here we go. Stochastics, beautiful. So now we have, one or two additional technical indicators that we like, and then we could just come here, hit save, or we could rename this chart layout. Like, let's say, we're like, wow, that just optimized the chart layout we just saved. We could just hit rename, and we could save this new layout. And then any tab we pull up, we can apply that. And speaking of, since I know we have some very brand new people, all you would do to pull up a new name is you'd hit plus, type in the ticker, hit add, and voila, this will show up. You have fundamentals on the left, options chain down here on the right, and then chart up here, or options chain down here, and then chart up here in the upper right. And again, this is the chart where we apply technicals, and this is the chart where we apply drawing tools. This charting tab is where you would do, like, imagine it as a more granular look on any given thing you want to look at, right? So you could still go back 5 years, but you could do some really, really cool things on a very granular level. And again, I'll include that recording in today's recap email that we'll send out. So with that being said, I'm going to take a sip of water. Please, any questions or comments, please put them in the chat here. We're always very interested in feedback. We want to make sure you guys get a lot out of these live sessions and that they're very valuable. So any feedback is always appreciated. I know we have a couple of support things in there, and I'll make sure that gets handled as well. Yes, thank you, Michael. Thank you for the kind words. Oh, I would be remiss if I didn't mention, let's see. So if you are not currently a user, all you need to do is come here, So IVolLive, boom, 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 free trial. Everything we offer also comes with a free trial. You see, we have futures, we have the basic, advanced, and pro real time. What I demonstrated today was pro real time. Then we have, because that has all the bells and whistles and everything was updating as the market updated. Advanced is the step down from that. This does not have the spread calculator, the spread scanner, which I love, but it's just not included in the advanced. And then basic doesn't have the P&L calc, which I demonstrated today, and it also doesn't have the spread scanner. So just be aware of that. But those are the easiest ways to get involved. Here's IVolLive Futures if you like trading futures. And then here is our API. So the API product is great if you want to do a lot of back testing. I like to use our API product to get all my historical data, do my back testing, and then I like to use IVolLive to help design my trades, like what I just did today for Cisco. So for our retail side of the equation for API, we have API Essentials, which lets you go back. It's only $69 a month, and it will give you all the end of day options and reference data, things like splits and dividends and things like that. Backtest API Plus will give you all of that plus Greeks and volatility services and IVX. So for anybody interested in backtesting that strategy that's been burning in your head, this is a really, really cool way to do it. And we've just kind of released this after working on it for a year plus behind the scenes. So any questions on any of that, we are at, let me put support at IVolUtility.com. And then I will put this link here for depending on which service appeals most to you. You can go there, and again, everything comes with a 7-day free trial, no matter what it is. Well, great. Well, I know we had a couple questions. I'll answer those in the emails that I send out. I'll also include that beefy charting session that shows the difference between the charts we covered today within IVolLive and then the charts you could cover from the charting tab. And we'll go from there. And then look out for a note for next week's webinar. I believe we're covering the P&L calculator, so we can have a lot of fun in there. I'll show puts, calls, spreads, and covered calls within the P&L. So that'll be next week. Great. Well, this has been Jonathan with IVolLive. Thank you for the kind words. And until next time, happy trading.